Welcome to What's in Store with Karly and Chris, the show where we cover hot topics at the cross-section of retail and real estate. I'm karly.iacono, and I'm joined by my co-host, Chris Ressa. Chris, good morning.
Good morning.
It is a lovely January day in northern New Jersey. How's life for you?
Feels like 6 when I woke up this morning. That's what it said. Felt like 6 degrees. I was like, oh my God.
6 degrees. You know, it's a great day to be filming a podcast.
And there you go.
So we really nailed that timing. We are talking about something, I don't really know that it's contrarian, but I think it's bold today. And that is our prediction for 2026. And I think today we're going to start with a conclusion. We're going to just save the listeners some time and we're going to throw out the punchline and then defend it.
Okay, let's go.
Are you ready? We confidently think that 2026 is going to be a stronger year for retail real estate than 2025.
Yes.
And there are a lot of factors, and 25 was even a really good year.
It was, yes.
So we think we're going to top that on basically all fronts.
We do.
And I think we need to now say why.
Let's go.
Let's do it. So we're going to frame the start of this with where we're coming from 25. How did the year end up? And I think the most important thing we can look at right now, or the most current data that's come out, is holiday sales. So this is not just about specific retailers and gifts. It's really a look at the industry at the end of the year. And it's the confluence of a lot of factors that go into holiday sales. So why don't we start with the numbers? I'll throw out a stat and then let's talk about why. So MasterCard, Visa, everyone has their holiday sales numbers and they all seem to be a little bit different. 3.8%, 4.2, 4.1. I think we could settle on an average of 4%.
That's what it feels like. Everyone's around 4%. Yes.
Exactly. So there's some nuances, but let's just decide on 4% increase in spending over previous years, right?
Well, sales increased, yes.
Right. And that's above inflation.
Yes.
Obviously. And that's a key differentiator there. So why?
Well, I think regardless of what you hear, any of the, I am very loath to like really dive into consumer sentiment reports. I think they are interesting predictors, but at the end of the day, sales tell the story. And so I think generally consumers, regardless of any consumer sentiment report, are super resilient. They're feeling, unemployment is still low. Wages are pretty strong. And I think generally those types of factors, especially with people expecting interest rates to decline and inflation seemingly from tariff-related noise seemingly, kind of settling down a bit. And for those reasons, I think consumers felt good about spending for the holiday. And I don't think that's stopping anytime soon with what's ahead.
And it's such an interesting distinction between sentiment and behavior. We can all predict and talk about how we're feeling or how much consumers should be spending.
Yeah.
It doesn't really matter, right? You can look at consumer debt levels and say, wow, they're really rising. And, that's going to stop spending, but it's not. So it's one thing to talk about.
Don't bet against the American consumer.
Exactly. It's one thing to talk about what they should be doing and what the thought and the sentiment is. And then you look at the actual behavior and the numbers and you're like, well, okay, they're still spending. And that's really what's important to this discussion, right?
Yeah.
I do think we should pause and talk about the K-shaped economy, though. So it's not every consumer spending at increased levels. It's, some of the higher income brackets doing very well and spending at higher levels. And then some of the more challenged consumers are pulling back and going to more value goods. So I do think it's a more nuanced story than every consumer is spending more and holiday sales are up across the board. I do think it's bifurcated. What are your thoughts on that?
I do. I think generally speaking, with the exception of unusual circumstances, the people with more disposable income usually spend more. And so, people say that, but like if you look at the value retailers, they're doing well. People are going and spending in their stores, right? And so I think there's obviously some things that are causing challenges, whether that's SNAP benefits and other incentives. But there's some places that that every consumer in America has to spend, and those aren't stopping.
Right. Grocery, services,
Necessity-based stuff, yeah.
Necessity-based, right.
And for, at the end of the day, the value-driven space that, caters to not just that consumer, but every consumer, right? Everyone's looking for value. Value's always in vogue.
I think that was one of your key headlines
Yes.
for 2025, and it's still good.
Yeah.
It still holds. It was a good line. I think there's a little more to the story too on pricing, right? So the payment data that I looked at showed pretty nominal changes. So there's less, I guess the increase in transactions didn't follow the increase in total sales. So the transactions or the payment data was pretty static, meaning that the average ticket, price was going up. Now you could look and say, well, that's inflation. Everything's more expensive. Consumers are just paying more. But as we just pointed out, the increase is above just inflation. But I think it's pricing driven, right? Retailers have been able to increase prices, again, that K-shaped economy on the goods they could. And then they're trying to balance that on the other side with more discounts for the value conscious consumer.
If you look at, I think, why that is, right? To me, that's retailers getting much better operationally. And I think the lessons from inventory control from COVID continue to shape how retailers operate. And, one of the things, if you, Dana tells you, one of the things she's always looking at is what are the inventories that retailers are carrying forward and how are they doing at, because holding goods that don't sell is really a challenge for retailers. And I think, there's no major inventory challenges from retailers holding goods that they couldn't move. And when you put the right amount of product in the store and you nail inventory, you can push on pricing because you have only so much product. And, I had things that were out of stock, not because of supply stuff, because of demand side. And it was probably the right amount for them to create margin.
Interesting. So do you think, touching on the supply side that you just brought up, do you think tariffs and the supply fluctuations and the onshoring and all of the changes we saw at the beginning of 25 have stabilized and that's no longer really a driving force on inventory levels?
I don't know the exact answer. What I can say is I haven't seen like all the pictures of retailers who had empty shelves because they couldn't get product. There was some fear of that. I didn't see online where deliveries were 6 weeks out because the product wasn't available. And so I think there's a more stable, just from a consumer lens, it feels like a more stable supply chain. And again, I think the supply chains that retailers invested in and the inventory controls post-COVID seem to be paying dividends, especially in margin.
So that's at least one big factor that was creating instability and challenge for retail in 2025 that hopefully has smoothed out for 26.
Yeah.
It seems like it has. There's a lot less discussion around tariffs. There's a lot less discussion around supply chain. And to your point, I'm sure there's still challenges there, but I don't think it's the same level. And if retailers performed as well as they did with those challenges in 2025, I think that's one factor that points to an even stronger year for 26.
For sure.
It's having that smoothed out. Let's move to retail bankruptcies. We had some big names at the beginning of last year that were a lot of space, right? Party City, we had Rite Aid. I I know Saks just filed this week, but that could be a restructuring, not a liquidation. Is there anything else on the horizon, or how does the bankruptcy landscape for retail look to you this year versus last?
There's a lot less major large chains who are projected to file from a balance sheet perspective, right? We had Joann, Big Lots, Rite Aid, Party City, and these were thousands of stores. And one of the things I continue to find interesting is we had a pretty strong 2025 in the face of that, plus the tariff noise that happened in the beginning of the year. So if you eliminate those two things and everything else held constant, I don't know how it wouldn't be a better 2026 just on those two things alone. By the way, there's other positive tailwinds coming that we didn't have in 25.
Ooh, okay. I don't know if I'm ready to unveil those yet, but good. Okay, I like some positivity. So just wrapping up the bankruptcy piece, I think the other side of that, though, is there was some space that was available for retailers to expand last year that we're not going to have this year. So if you're a retailer and you're doing well, that may not be a positive, right? You might want some bankruptcies of competitors or maybe even different sectors just so you can expand. So how do you think that's going to affect the lack of bankruptcies and the lack of space givebacks is going to affect retailers' expansion plans?
I think that retailers who have really good rollout systems will find a way. I think one of the ways that they find a way is, I think this is the year of price. And I think the net effect of rent on retail real estate is going to move this year. And I think we've had, rent growth. We've also had rises in costs to install tenants. I think the net effective of that is going to be higher because of just pure supply and demand.
So more of a landlord's market, operator market, where tenants have to compete even more strongly for space.
I think so, yes.
And that could be less TI from the landlord perspective.
It could be less TI. It could be higher face rates.
Yeah.
It could be stronger non-monetary provisions. It could show up in a lot of different ways. But I think this is definitely the year where pricing moves on real estate.
That's great because that affects the NOI, the bottom line, and of course the values for
sure
all our properties. So
yes,
that's really the golden nugget
yes.
of all of it. Let's jump back to the consumer for a minute and touch on tax changes. So we've talked about consumer debt, consumer spending remaining resilient. Do you think any of the changes that were put in place from the Big Beautiful Bill, what was that last year, and rolling into this year, are going to actually affect behavior? Could they boost spending? And if so, in what categories and what cohorts?
So I think clearly the prediction is the consumer is going to have more disposable income this year. That's what most economists are saying, which, as you mentioned before, when you give Americans more disposable income, they usually spend. And so I think that's, telling right there. When we talk about categories, I think it's interesting. Bob's Discount Furniture just filed their IPO to go public. I think that's a really interesting indicator of what's going on, because that the home furnishings post-COVID went up tremendously. And then home improvement really was a challenge sector. Well, if we have the home market, filing IPOs, that's a really strong conviction about where the market is, the consumer, obviously their own business. But to see that one, and that was like the first one I saw like coming into the new year to me, and we didn't have a lot of IPOs last year, and I think we're going to have more this year. To me, that's a really interesting sign, right? There's conviction around the long term of the consumer, and we have some, really near-term things that should benefit the consumer.
I wonder if that's a broader public policy discussion too. The regulation perhaps is easier. Now, I don't know all the nuances of this, but My guess would be this administration is making IPOs slightly easier to get to the finish line than the previous. I wonder how much of that is Bob's outperforming and feeling like this is a great time because the sector is performing better than expected, or could it be that it's just easier to go public and access the public debt markets because of regulation? Maybe it's both.
I don't know how much regulation plays a factor. I mean, they've been a very strong retailer, and I think you have to have a conviction about and a story about the growth of the business, right? Typically, that means their IPO is a growth story and there's room to grow. Well, in that sense, one of the avenues of Bob's growth has been store expansion. And so they're going to obviously attack more markets, more infill stores, and open up more stores. And to that end, you have to have conviction around the consumer.
They have a really great shopping experience. I'm sure you've been in their stores
I have,
before.
yeah.
So I remember distinctly, quick side story, buying furniture, and they have a whole cafe where they give kids ice cream. They just have to stay in the little cafe area. I don't know if you brought your kids when you went, but it was magical because I needed to buy a new couch and the kids were there. And I said, okay, we're going to put you down. You just eat your ice cream to stay here and I'll be back.
Wow.
It was great. I'm like, so smart.
That's a good one.
So yeah, really interesting company for sure.
Yes.
All right, let's move on to traffic drivers. So we've talked about kind of the policy that's going to allow for retail expansion. We've talked about some tax cuts. We've talked about consumers remaining resilient and spending with any free cash that they have. What are the unique traffic drivers this year? Because it's a pretty exciting year in America.
Yeah, I mean, we have, when you have more disposable income and then you couple that with reasons to spend, I think that really is a great setup for retailers. Obviously, you have the World Cup.
Very exciting. Coming
really
right
cool.
in our backyard.
Are you going to go?
I looked at tickets and they were $4,000 a piece. And I thought, do I want to go $8,000 bad or do I want to go like $1,000? So no, not yet, but I'm trying to figure out a way.
But to that end, if they're getting that,
right,
that speaks
crazy
to the
numbers.
Consumer spending right there.
Yeah.
So the trick is, right, there's a lot of tickets that are high priced. The trick is you have to find a game that is not the most sought after game,
right,
and find a seat that maybe isn't the perfect seat. But
have you figured this out, by the way? Do you have tickets?
I'm close to some tickets.
Solution.
I'm close to some tickets. I've been working on it. I have a list of 50 sporting events that I want on my bucket list that I want to get to. And one of them is the World Cup.
Yeah.
And the fact that it's in our backyard, I feel like
I have to go.
So I am late to the party. Mm-hmm. There are also these lotteries you get in to get tickets.
Yeah, tried that.
Now, by the way, that's not a free ticket. That just gets you a seat. That's how in demand they are and how many people want to go. Right. And you have all this international tourism that's going to come. So we have Olympics. This is an Olympic year.
Mm-hmm. Not in the U.S. though, right? Aren't
no.
they in Italy?
Yeah, but it's just a reason to spend, right? There's going to be a lot of supporter and excitement, energy. Right, and then we have America 250.
Right. That's very exciting. I don't know exactly how that's going to unfold, but it feels like a big deal. Are we going to have parades, event? Like, what are you predicting for this?
I don't know, but exactly. But I do think there's going to be a lot of pride and spending that comes around it. Even simple things like having a party creates a lot of spending.
Yes, I can vouch for that. It does. I'm like, oh, I'll have a few people over. So I'm like, oh my God.
We have a spot that like we have also, right? We have, you mentioned traffic drivers. In the beginning of the year, we had bankruptcy. In 2025, we had retail bankruptcies. Then we had Liberation Day and tariff noise. And so that led to some uncertainty and some pausing. So a lot of leasing got done in the second half of 26 for retail centers. Those stores aren't open yet. They're under construction. Those are going to open in 26. And that, new tenants in shopping centers are always exciting and reasons to come and increase traffic. And so when you couple all these things, the setup is just phenomenal for retail.
Outstanding energy.
Yeah.
Really, just overall.
Yes.
Not to be a Debbie Downer, but any risks, any headwinds, AI, maybe. How do you think AI?
There's a lot of things to offset, right? Like if interest rates come down, that'll help the consumer.
Mm-hmm.
And so those are positives. I think, we don't know of any black swan events. So black swan events could always...
They wouldn't be black swan if we knew about them.
Right. They take you down, right? But obviously, any acceleration in unemployment would be the biggest downer, in my opinion. And, obviously everyone's trying to get to the secret AI solution that makes their business take off. And so that could be, and we say that's a risk. It's probably a short-term risk, right? Our pitch is that 2026 is meaningfully better than 2025 for retail real estate. I say short-term because clearly the pitch that the world is saying is that eventually AI is going to be better for all.
Right.
But that's the positive, right? And so obviously in the short term, that could lead to some friction around getting to the end of the rainbow. So if that friction happens in 26, that could be an issue.
Could be a slowdown.
Yeah.
And you're looking at that more from just job loss and the consumer not able to find a new job. So impacting spending.
Yes. Potentially.
I wonder how resilient the job market will be in creating the next wave of jobs, right? Because there's going to be new jobs
There's going to be new jobs. That's why I said the short term versus long term. And
right.
all the people out there smarter than me that are making predictions feel like for the consumer, they're saying 2026 is going to be better than 25. And therefore, it feels like, I don't know, but it doesn't feel like that AI friction is going to happen at scale in 26. Maybe it does, but not sure.
We have a little more runway.
Maybe, I don't know.
But you never know with AI. It's true. What about geopolitical tensions? I think, the theme of 26 is uncertainty is decreasing. We have more clarity on the market in a lot of ways. This is one area that, I don't know, it feels like there's a new adventure every day geopolitically. What do you think that could impact retail real estate in any way?
I mean, indirectly, obviously, any geopolitical tensions that slow down the overall economy, sure. I'm no political economist or political expert. So what I would say is if there's some black swan event that, many Americans don't know about then that happens from a geopolitical sense, that could be at issue.
It's very hard to predict that, though. We can only kind of look at what's going on now and go,
So I wasn't aware, but there is and I know we shouldn't do this. I'm going to pull out my phone real quick. So there is I wasn't aware of this, but this is fascinating. Someone in my office told me. There is a website.
This is when Chris goes rogue, everyone. No guarantees here.
There's a website, the Pentagon Pizza Index. Okay. Are you familiar with this?
I am not.
So it's a real-time indicator of tension, real-time military tension indicator backed by pizza sales data. And so there are people who are tracking the Papa John's, the Domino's, and all the pizza spots in and around the Pentagon.
Okay.
And when those sales are spiking, every time the sales have spiked like some certain amount or something, and I don't know everything about it, it's led to some event that we
Dramatic.
hear about on the news the next day because the Pentagon, I guess the people in the Pentagon are staying up all night ordering pizza and doing this.
That's actually pretty fascinating.
It's amazing.
I think that might be my new obsession. Yeah.
So there's this, I'll send you the website. So there's this pizza tracker around the Pentagon that's supposed to be a leading indicator of military tensions.
Wow.
Yes.
Watch, that's probably the most accurate thing that we hear in the news, right? Just forget all the other news channels. We're just going to watch the pizza tracking indicator. That's crazy.
Yes.
All right. That was a good tangent.
Yes.
I'm intrigued. Okay. So aside from any black swan event that obviously we don't know about or any of these geopolitical tensions escalating further, we feel like it's going to be a non-issue for retail real estate.
Yeah.
As far as we can tell right now.
Yes.
Yeah, so I don't see anything in 26 that makes me question our prediction that it's going to be a stronger year. I do feel like a lot of the factors that challenge 25 have smoothed out, which is really good news.
Yeah. I mean, when you have tighter supply, like we've been talking, the world's been talking about tighter supply and increased demand, leasing velocity for space. And if you look at and that's not a new headline. What has really happened to me, what's happened is that's moved occupancy more than rents. And I think this is the year where all of these things collide, where the tighter supply, the consumer, and the tenant demand collide, and that leads to price increases for retail real estate.
And that is a direct correlation to values because it increases the NOI, assuming expenses don't skyrocket. But it seems like inflation has stabilized, thank God. So if expenses stay stable, we're predicting a meaningful increase in NOI and stable occupancy, then our values could materially go up at the same time that interest rates are coming down, and therefore cap rates should see some compression as well.
Yeah.
It's a good year to be a retail real estate owner.
We'll see. But
buying could be challenging, right? Which it has been for the last few years, finding the deals because they're very limited. But being an owner and operating your property successfully could be a really nice way to gain value.
For sure.
Exciting.
Yes.
It's going to be an awesome year ahead. Wish everyone listening all good things and success for 26.
Yes.
Thanks so much for joining us for this episode of What's in Store. We appreciate you tuning in and hope to see you again very soon. Take care, everyone.
Bye.
Thanks, Chris.
Thank you.